Knowing whether your business is really making a profit or facing a loss is very important. It's not only about how much money you receive from sales, but also about how much you spend and what amount actually remains as profit. In SokoBook, you can clearly see all this information through the profit and loss report. In this video, we will walk step by step through how to open it and how to understand every section. First, open the SokoBook app on your phone. Then tap the More menu and select View Reports. On the Reports page, you'll find various types of reports, such as sales reports, party transaction reports, inventory reports, and others. To see your business profit, tap Profit and Loss Report. When the report opens, you will see the Show Stock-Based Profit option. It is turned off by default. This means the system calculates profit using the standard method based mainly on sales and expenses. At the top of the screen, you will see the report period. For example, this month. You can change the dates if you want to see the report for a different period. Now let's understand each section one by one. First is net sales. This is the total income from all your sales transactions during the selected period. It shows how much money your business earned from selling products or services. If your net sales are high, it means your business is generating good revenue. Below, you'll find cost of goods sold. COGS is the total cost of the goods that were sold. For example, if you sell a product for 100 naira and its base cost was 60 naira, that 60 naira is counted in COGS. So COGS represents the actual cost of the items you sold. Next is gross profit. Gross profit is calculated by subtracting COGS from net sales. In simple terms, net sales minus COGS equals gross profit. This shows your initial profit before adding other income or subtracting any expenses. It tells you how much profit you made only from selling goods. After that, you'll see Other Net Income. Inside this section, you will find Other Income and Party Adjustments. Other income includes any income that is not directly from sales, such as extra earnings recorded in the app. Below that is Party Adjustments. If you increase a party's balance using the Adjust Balance feature in the Party menu, it appears here. This is because when you add a balance, the system treats it as income. And since it is treated as income, it increases your total profit. Next, you'll see Net Expenses. This section shows all the money your business spent. Inside this section, you will find expenses and party adjustments. Expenses include operational costs, such as rent, salaries, electricity, transport, and any other expenses recorded in the app. Below that is Party Adjustments again. If you reduce a party balance using the Adjust Balance feature, it is recorded here. This is because reducing a balance means money is going out from your business, so the system treats it as an expense. So remember, party adjustments can affect the report in two ways. If the balance is added, it is treated as income. If the balance is reduced, it is treated as an expense. This ensures your report reflects the real financial situation of your business. Finally, you will see net profit. This is the final result. It is calculated after adding gross profit, adding other income, and subtracting all expenses. If the number is positive, your business made a profit. If the number is negative, your business made a loss. This is the most important number in the report. Now let's look at the detailed version, when Show Stock-Based Profit is turned on. First, make sure the report period is correct. Then turn on the Show Stock-Based Profit toggle. Once enabled, the layout changes slightly because the system now calculates profit based on inventory movement as well. This gives you a more detailed and accurate view. The first section remains net sales, but in the detailed view it includes sales, sales returns, and tax payable. Sales is the total value of sales transactions before any deductions. Below that is sales returns. These are goods returned by customers. Since the goods are returned, this amount reduces total sales. Next is tax payable. This is tax collected from sales that must be paid. Since it is not actual business profit, it also reduces net sales. After all calculations, you get the final net sales amount. Net sales shows the total income generated from sales during the selected period. And this is where the calculation begins. Below that is net purchases. This section includes purchases, purchase returns, and tax receivable. Purchases represent the total value of goods bought during the period. Purchase returns are goods returned to suppliers, reducing total purchases. Tax receivable is tax paid on purchases that can be credited or adjusted. After these are calculated, you get net purchases. Net purchases show the total value of goods bought during the period after adjusting purchase returns and tax. This helps the system determine how much was spent on restocking inventory. Next are the inventory components. After that, you will see stock additions. Stock additions represent inventory that was added using the inventory feature. This is included because adding stock means money has been invested into inventory. Then comes stock reductions. Stock reductions represent inventory that was reduced from the system. This reflects stock that has moved out during the period. Next is opening stock. Opening stock shows the value of inventory available at the beginning of the selected period. This helps the system know how much stock you started with. After that, you will see closing stock. Closing stock represents the value of inventory remaining at the end of the selected period. This ensures that unsold stock is properly considered in the calculation. Once these components are taken into account, the system calculates gross profit. This gross profit now reflects not only your sales and purchases, but also your inventory movement. Below that, you will see other net income. This includes other income and party adjustments where balances were added. These are additional earnings apart from your regular sales. Next is net expenses. This includes all business expenses and party adjustments where balances were reduced. These represent the money spent during the period. And finally, after considering all income and expenses, the system shows the final net profit. At the bottom of the screen, you'll find three main options to manage your report easily. The first is the download section, where the app automatically generates the report and allows you to save it directly to your device's files for future use. Next is the print PDF option, which lets you convert the report into a printable format, making it convenient if you need a hard copy or want to save it as a PDF. Additionally, you'll find a share option, which gives you the flexibility to quickly send the report to others, either as an image or a PDF, depending on your preference. This gives you a complete picture of how much you earn, how much you spend, how inventory affects your profit, and whether your business is truly profitable or not. This concludes the tutorial on how to view your profit and loss report. Thank you for using SokoBook and manage your business digitally with SokoBook.